there, Teresa Timms, the SoCal Loan Pro, providing mortgage and real estate information for the Southern California market. Hello, I hope everyone's doing well today. I'm going to have a market update and give you my forecast for what Southern California real estate has to give us in the future. Okay, so let's get started. Natalie! The lovely Natalie is going to give us... it was a long ways,
yes.
Huh? Hey, so we wanted to kind of give you a market update with regard to the rates. So what's going on, Natalie?
Rates are still going up. Not so much, but they're still going up a little bit.
They're going up, okay.
Since the last market update.
How much do you think they went up since 3 weeks ago?
Right now, I'd say they're in the
mid-threes?
Mid-threes, maybe really low fours.
Okay.
Depending on
your equity position and all that good stuff.
Yes.
One of the things that's happening is that the government was keeping the rates low to help the economy, and while this has been a really good thing, it could, lead to inflation. Now, once the economy starts to do better, and we're all on our feet, the thing that they were using to achieve this was something called quantitative easing. So basically, that's just a fancy word for the government's helping to keep interest rates low. Now, Bernanke hasn't came out and said that he's going to stop this, but I think that a lot of the smart economists and people like that think that he's going to have a slowing into the future. So this is something that I want to read to you real fast. So there's a growing number of economists that feel Mr. Bernanke may start to talk of tapering, and there is a camp that feels that the statement may ease concerns of near tapering. We feel that QE3 will last until the end of the year and gradually begin to taper in the first quarter of 2014. So while interest rates may come back low again, we don't know. We don't have a crystal ball. Whether you can get in the low threes again or whether you need to lock in the mid to upper threes, that's going to be up to you. I'm more of a conservative person. When you see rates going up, it's kind of like a common sense thing that you would take a lock position, right?
Yes, correct, definitely.
So last 3 weeks ago, you recommended that we all
locked.
Locked.
Yes, and I recommend the same today.
So, again, you've heard it here first, folks. Let's see. So we're going to lock in the short term, possible float in the long term. All right. I thank you so much, Natalie.
Thank you. Till next time.
All right. I went to a mortgage conference in Vegas that was super fun, and as mortgage conferences are in Vegas, right, or real estate conferences. And I heard Tony Robbins speak. Actually, it was this thing. So I don't know if you can see it. Mastermind 2013. The last time I was in Vegas for a mortgage conference was in 2007. So it was like a minute ago, right? And one of the speakers that I love, Peter Schiff, stood up in front of about 3,000 mortgage people and basically said, "Hey, how's everybody going? I can't remember exactly what he said, but basically it was like, hey, sorry to let you know that 85% of you in this room won't have a job, so you better start figuring out what you're going to do next year. The mortgage market is going to crash, prices are going to go down 65%, and yada yada." So when we heard that, I'm a big follower of Bruce Norris, who is a local forecaster in the Inland Empire, and he's always been spot on, even maybe a little bit on the conservative side. And so he was forecasting, that we were going to tank in 2006, but because the crazy programs were still around, people were still able to purchase, and affordability was still low. And then in 2007, that's when the prices really started to decline. So Peter Schiff was right on the money. We thought it was going to go down 30 or 40%, but in a lot of areas it went 45, 50, even 65%. So with that being said, this event, Barry Habib, who is a respected loan officer, and forecaster and person of knowledge in our market, stood up and said that home prices will continue upwards of 40%. And I know that a lot of people are like, oh, 40%, but I mean, look how much they've gone up. In 2013, 20% in the Inland Empire. 2014, 20% in the Inland Empire. Now, if you've got an $800,000 or $900,000 house or $1 million house, I mean, it's probably not going to be 40%. Maybe like 20% or so. But we're definitely going up, and we can look for this party to end somewhere around 2016. It's really going to depend on what happens with monetary policy and with interest rates and all that good stuff. So I know I've been beating this like a dead horse, but if you're going to buy, do yourself a favor, do your family a favor, and buy now. Don't wait till next year when you're chasing your tail. And I've got some secrets on how you can get your offer accepted that most realtors or lenders wouldn't dare to tell you. So if you're dying to hear my secret, call me at 909-920-3500. At any motivational event, you always hope to take away something. I had several takeaways last week, but one of them really resonated with me, and I'm still thinking about it today. And Steve Jobs quoted some famous person, and the quote kind of went something like this, that if today were your last day on earth and you were to get up and look yourself in the mirror, would you be proud and content that how you were going to spend that day you would be happy with? And if the answer is no, more often than not, then you need to change it up. And so every morning I've been getting up and asking myself that question, and I've been happy with the answer. But if you're not, please think about it and see what you can do to change up your life for 2013 and beyond. Teresa Timms, providing you mortgage and real estate information in Southern California since 1998. Have a fabulous day.